So hi everyone, my name is Joshua Grobman and I lead expansion for WISE in Africa. And I want to thank JSE for the opportunity to give a brief talk about what we do and what are the kind of opportunities and challenges that we see in Africa and in South Africa in particular. So a bit about us. So we are WISE. We're a global fintech founded in the UK 13 years ago by two Estonians. And we've been listing in the London Stock Exchange since 2021. And we are a company with a mission, which is to enable money without borders. So every day we come to work on this mission, which is to build the best way to move and manage the world's money, which is definitely not a small challenge. So we're tackling a massive market, which is cross-border payments. And there are three big problems that we identified and wanted to solve. So number one is that sending money traditionally has been very expensive, slow, and inconvenient. The second one was that there wasn't really a product that catered for international banking needs. And the third was that the infrastructure that supported cross-border payments hadn't evolved in decades. So what are we doing about this? So we've made great progress in fixing transfers. We're making it cheaper, easier, and faster to move the world's money. We've also created a global account for individuals and SMBs. And we're building this network, this infrastructure, and are also selling it to other FIs and banks. And what exactly are the products that we're building to solve this problem? So we're investing in three core products. Number one is a WISE account, where people can receive money, they can hold money, they can send money, and they can spend money, and in some countries, they can invest money as well. We have WISE Business, which has the same features as a WISE account, but with some business-specific features. And we have WISE Platform, which is our infrastructure as a service product, where we sell this infrastructure to other banks and FIs that want to move money internationally for their customers. So it turns out that what we've built is resonating in the market and is paying off. So last year, we moved around 30 billion of cross-currency every quarter. But we're still only scratching the surface. Like I said, the cross-border payment market is a huge market, and we still have very small market share, both in the individual market and in the business market. And how are we able to do this? How are we building an infrastructure that is allowing us to move money across border in a much more efficient way? You're probably familiar with legacy solutions, like SWIFT, for example, where they use many intermediaries, correspondent banks, which make the process expensive, slow, and give the customer uncertainty on where the money is at. So what we've done, basically, is cut the middleman. We have set up a network of local bank accounts working with local partners, and we're able to cut up the middleman completely. This means that we control both the pay-ins and the payouts, which, of course, gives us the ability to offer better prices, to do transactions faster, and also give more visibility to our customers on where the money is at. Of course, the fact that we have liquidity in different accounts across the world means that we can use that liquidity to pay FX the other way, which also results in cheaper transfers for our customers. So again, how does this infrastructure, where we're able to move money internationally through domestic payment rails, benefit our customers? So for example, on speed, 63% of our transfers are instant, where in legacy products, it takes about 3 to 5 business days. Our fees are between 5 and 10 times lower. We also give our customers the mid-market rate with no markup and no hidden fees, giving full transparency in our pricing. We're also able to provide estimates on where the money will arrive, and can give visibility to customers on where the money is at every stage of the process. So over the past 13 years, we have built a market-leading infrastructure, increasingly difficult to replicate. No? And we've done this through direct connections to the payment systems in 5 different markets, including the fast payment systems in the UK, a global portfolio of licenses with more than 65 licenses that allows us to give our products to customers in different markets, an extensive network of banking and card partners, which help us create redundancies in the different markets we serve and create operational reliability, and local servicing and compliance team, which help us deliver a great product experience while meeting with local regulatory requirements. So on top of this, we have built also the technology and capabilities that help us support this infrastructure, which also contributes to the competitive advantage that we have by having this infrastructure. Among these things are a single global treasury system to effectively manage liquidity and FX, machine learning fin crime engines, and 24/7 customer support. All this thanks to the more than 800 engineers that we have globally and 1,300 fin crime and operation staff that we have. So given the context of the meeting today, I wanted to talk a bit about where we're standing in Africa. So let me explain to you what this map says. So what you see here on dark green are countries where we allow our customers to send money to and from, right? And what you see in light green are countries where we're only allowing our customers to send money to those countries. What this effectively means is that even though we are operating in Africa, we are not serving any African customers yet. We're only allowing customers from other markets to send money to a handful of African countries like Egypt, Morocco, Nigeria, Kenya, Tanzania, and South Africa. So this means that we have a lot of coverage to cover, and it's a very interesting opportunity for us. And what are the factors that showcase how good this opportunity? So number one is that it's a growing market, of course, fueled by the population growth in Africa. So only in remittances, Africa had 87 billion in inbound remittances and 4 billion in outbound remittances in 2023. This is not including B2B, B2C, and C2B flows, which means the market is much larger. No? We also see increased mobile and internet penetration in Africa. No? According to the Global System for Mobile Communications, specifically in Sub-Saharan Africa, we had 43% penetration rate in unique mobile subscribers in 2023, and this is expected to be half of the population by 2030. In terms of the fees to send money to the continent are still higher compared to other regions. For example, to send $200 to Sub-Saharan Africa, it costs in average 7.73%, while the global average is 6.35%. But we also face challenges when expanding to Africa. And I've grouped them in 2 areas. One is the infrastructure, right? So most regional banks still lack the technical capabilities to integrate with global players in an efficient way, meaning that there's not a lot of banks where with which we can connect to enable multiple markets with a single API integration. There is still a limited number of instant payment systems, even though this has been improving a lot. There are currently 32 active systems and 17 in development. However, still many of these payment systems are interoperable. So Africa payments landscape is still highly fragmented with different systems that operate in silos and are not connected to each other. What this means for us is that to have full coverage, we need multiple integrations. In terms of regulatory barriers, we see complex licensing processes that delay our ability to expand quickly. Lack of regulatory frameworks for non-banks to actually deliver the same services that banks do. and also lack of ability to access the payment systems directly. We also see complex KYC and AML requirements, which makes our products costlier. And of course, the exchange control environment is also a big challenge that we need to face when expanding across Africa. So let's talk about South Africa. And why is South Africa particularly appealing to us? So number one is that it is the largest outbound corridor in the region and a regional business hub. As it was mentioned a few times during this meeting, it is a gateway or one of the gateways to Africa. But according to the World Bank, it's still the costliest G20 country to send remittances from. So almost twice the average of G20 countries if you're sending $200, even though this has been improving with time as well. But we see very interesting developments as well that we think can bring a lot of benefit to local customers. Number one is improved capabilities, like the introduction of low-value instant payment systems, PayShap in particular, which will allow companies like us to do instant collections and payouts, as well as pay by proxy. There are also interesting ongoing policy developments aimed towards providing access of non-banks to payment systems, as per the recommendation of the 2018 review of the National Payment Systems Act. So to summarize, we're only getting started, and we acknowledge the potential of the African market. So our North Star is to actually offer WISE to all customers in Africa, like the map that I showed you that it was light green. Eventually, we would like to see it dark green. And of course, not only Africa, but across the world. Thank you very much.
Thank you very much for that presentation. We've now got the last company presentation for today, RH Magnesita. We've got Chris, who's going to be telling us more about the company. They've got a market capitalization of 1.52 billion sterling. And the company is headquartered in Vienna, Austria, and is a global leader of refractory products for industries like and cement. Chris, over to you.
Thank you very much. So I have the graveyard shift on Halloween. So you want the 15-minute version or the 30-minute version? 15 minutes. Hold on one second. I thank you, TBS and JSE, for the opportunity. I originally thought I was coming along to present the company to investors in Africa, and I'm always keen to do that. But I feel that was something of a ruse to get me in the room, and I expect I'll be pinned down by the JSE and Standard Bank after this to commit to a secondary listing in Joburg. So well done, your plan has worked. Maybe we'll make it a bit interactive. After you hear the story, you can tell me with a show of hands if you think I should take it forward and look at this in the South African context. Are these slides gonna? I mean, before I start anyway, I do have some experience of advising on secondary listings as a banker, and I've had two roles in investor relations now, 10 years of investor relations, living with dual listings. In the first case, it was a Hong Kong listing, was the second listing. And in the current case, it's London, primarily with a secondary listing in Vienna. I think accessing additional investors is always a benefit. And I would agree the quality of interactions that I've had with South African institutions is always top notch, certainly compared to London, as was mentioned earlier. I think the way companies look at it, one, is there any additional cost? We're told not. There's upfront costs, there's ongoing costs. Management teams don't like costs for no reason. There's also additional administrative burdens sometimes, particularly with Hong Kong. I found that with the translation or some incompatibility of the listing rules between Hong Kong and London too. It seems that with JSE, they've got a more of a streamlined setup. So therefore, that's a positive. And finally, will it work? There are plenty of examples of companies, especially smaller ones, that have gone out and done secondary listings, and then the liquidity never quite arrives for one reason or another. So it's really good to see there are companies doing that right now and getting a good result. So So there we are. So hopefully I'll give you an example of a company today with a truly global business. We chose to list in London. We don't have any operations in South Africa, but you'll see we have some very important customers in South Africa because of the nature of our business. So just quickly, some numbers. 1.5 billion market cap, an EBITDA of just over 400 million, and EBITDA of 543 last year. I would say it's probably the highest EBITDA FTSE 250 company you've never heard of before. And that's my fault. The company was formed in 2017 through the merger of RHI, an Austrian company, and Magnesita from Brazil, and was listed following that merger in London, which was chosen as the primary market because it was a neutral market from an Austria and Brazil perspective, and the best, judged to be the best place to list at that time. We have a secondary listing in Vienna already for takeover reasons, regulation reasons, but all the liquidity is in London. We have 7 analysts here and 1 in Vienna. We pay a regular dividend. It's well covered by earnings. And we've had really stable margins over the last few years, despite lots of volatility in our markets. And we're executing a major M&A strategy with 11 acquisitions in the last 3 years, with a total deal value of 1.2 billion so far. Quick introduction to the senior management. There is a strong SA link here. CEO, Stefan, from a chemicals background, it's not the SA link. Ian Botha is. And for those of you who maybe have experience of South African listed companies, Ian was at Anglo American for 20 years and for several years was the CFO of Anglo American Platinum. I'm pleased to say that RHI Magnesita is now benefiting from his extensive experience and leadership, and it's a pleasure to work with him, actually. Okay, refractories. Hands up who's heard of refractories before? 1, 2 people. Okay. The person in the street does not know what a refractory is, but everything you see around you that's made of metal, glass, concrete, cement has flowed over or touched or been contained within a refractory lining in its manufacturing process. You cannot make any of these things, which we utilize in our daily life, without refractories, and they get used up. They're a consumable item, like the soles of your shoes or the tires on your car. It takes 10 to 15 kilograms of refractories to make 1 ton of steel. It takes 4 kilograms to make a ton of glass, et cetera, et cetera, et cetera. So it's probably the most important product you've never heard of. Most of it is used in steel, 70% of revenues, and then going down the list, cement is the next biggest, non-ferrous metals, glass, and there's also important energy and chemicals applications as well. This is what they look like. This is a steel electric arc furnace, and when we say linings, I mean, there's a lot of stuff going on there. You've got the working lining, you've got the permanent lining, you've got the hearth, you've got all these pieces of equipment. Everything inside that furnace, operating at 1800 degrees centigrade, has to withstand the heat of the steel. And it gets used up over time. So as you use that furnace, the lining burns away. Let's skip through. So we have 47 plants globally. We've got sales offices everywhere. We have production in North America, South America, Europe, India, and China. We don't have production in Africa, Middle East, or Australia. They're slightly smaller markets, so we serve them from elsewhere. But usually it works best if you have your plants close to the customers. Uniquely for refractory companies, we actually have a high degree of vertical integration. So we actually produce 50% of the raw materials that we use ourselves from our own mines. And that's primarily something called dead burned magnesia and dead burned dolomite. So we make additional margin from the mining business. And actually, our mining operations are quite significant in their own right. This is Brumado in Brazil. It is by far our largest raw material site. It's the most strategic. There's 100 years of high quality magnesite reserves there, 200 years of mineral resources, and that's just what we've drilled. There's more there, but that's just what's drilled. This site could, if needed, supply the whole world with refractory raw materials, and it's the only one, or the major one, outside of China. So sometimes for some of our customers looking for a non-China supply chain, because most of these materials come from China normally, this is of great interest to some of our customers. We have many sites. Here's another one. This is one of my favorites in Austria, where I live currently, in Hochfilzen. This is a long-established site for dolomite and magnesite production. Its products from here go globally, and if you walk around the goods yard, you'll see, shipping labels with all sorts of destinations. It's really a site of kind of global significance, I would say, in particular for electric arc furnace hearth mixes. M&A, I mentioned 1.2 billion spent. We're currently in the process of completing a deal in the US, which we hope to complete in Q1 for 400 million. That's quite a major part of our kind of capital allocation strategy, is to round up and to consolidate this very fragmented global industry. Last two slides. I think people often make the mistake of assuming that since we're closely involved with the steel industry, that we share the earnings volatility of our customers. And this is not the case, actually. It's quite a defensive business. We have the upside when times are good. But as you can see, there's a 20-plus year track record here. The red line is the EBITDA margin. It's positive. You've got major downturns and cataclysmic events happening in there, and it sort of dips from 15% down to 10%. That's because these products are so essential. You can't make anything, as I mentioned, without them. So passing on the cost increases, passing on inflation is very easy for us to do. And that results in this very good track record. We've managed to hold margins up. We're in a downturn right now. I don't know if you know about this, but it's a pretty hefty one in terms of steel, and we're very healthy margins at the moment. The last slide is from our 2023 results. Definitely for the investors who may be out there. I mean, some of the yield numbers might be different from February when I last did it, but we are the red bar in every chart. The dark grey ones are the FTSE 100 industrial peers, and the light grey ones are the FTSE 250 sector peers. We have the highest absolute EBITDA in the index, in the FTSE 350, third highest. There's only two FTSE 100 companies bigger than us, and it's pretty close. We've got a cash flow yield of 14%, which speaks for itself. And we're deploying that free cash flow into accretive M&A. We make sure shareholders get consistent value from the dividend, and that's a yield of around 4% at the moment. And you get all of this for an EV/EBITDA rating of 6 times and a PE of 7. So I think it's possibly the most profitable and interesting FTSE 250 company you haven't heard of until now. And that's partly to do with the history and how it listed, etc. But if you ask any steel producer, metals producer, who's the world leader in refractories, they'll know exactly who you're talking about. So my contact details are on the website. They're in every announcement that we make. As an investor, you can register on the website for updates, etc. Happy to give one-on-one calls. But having heard the story, I think there's quite a kind of strong tie with the metals and mining industry. And therefore, on the one hand, South Africa-based investors will be comfortable with the drivers behind our business. However, if they're looking to diversify away from metals and mining, then maybe that's not going to help in that sense. But what do we think? Let's have the show of hands. Should I be looking at JSE listing? Looks like we have a small majority for pursuing that. Okay, thank you very much for the opportunity, and let's move on.
Thank you so much. Good. Ladies and gentlemen, I am back with a very important but a short job to do. That is to close us up and to thank each one of you for your participation, and to thank all the teams that have made today happen, from our gracious hosts, UBS, from our partners in the ecosystem, the bankers, PSG, Standard Bank, JP Morgan. Thank you so much for your support, and a massive thank you to the whole JSE team that's been on the road for a week now almost, as well as to you, our gracious audience. Thank you so much for your time. Please do join us for some drinks and some more networking, and any more questions that you might have for us or for our guests. Can we give yourselves a great round of applause?